Hello. We just took a quiz in here. Let's go ahead and show that up there if we can. Online students, you might have this in your packet. I would encourage you just to push pause on this and see if you can do this, and then push play and we'll go over it. That's the first 4 questions of the quiz, and then I've got one last question down here. Okay, so you can take a look at that and push play after you've taken that, and you can assess how you did. All right? Okay, let's go over it. Let's take a look at this. Let's see if I can make this a little easier to see. Okay. Take a look at that little quick and dirty manufacturing statement that I did. Those are the first 3 things I asked for, right? Materials put into production, total manufacturing cost, cost of goods manufactured. Did anybody get those 3 answers? Okay. Okay. Well, you should have wrote down your answers on the large part of your quiz. Okay. Are those numbers familiar to y'all?
Yeah, with the 1 in front.
Okay. All right. Okay. All right. Then you figure out cost of goods sold, right? Figure out cost of goods sold, which is the beginning inventory of finished goods, plus the COGM that we calculated above, minus the ending inventory of finished goods, and that gives us cost of goods sold. Is that correct? So those are the first 4 answers. Are you with me? Okay. Anybody get all 4 of those right? Yeah?
That was really close.
Okay. All right, you're really close, just a few numbers off.
No, I put 1,000 instead of 2,000 on everything.
The whole way down.
Why?
I don't know.
Why would you do that?
I don't know. So I literally missed everything because I put a 1 instead of a 2.
I'm sorry.
That makes me
Does that help?
No, not at all.
Let's take a look at the.
You can have it all right
Let's
here.
take a look at the last one on the Elmo. What I wanted you to do here was some items are listed for Treehouse Company. What is the amount of manufacturing overhead for this company? Well, let's circle the things that are MOH. Administrative expense? No. Depreciation on assembly equipment? Yes. Direct labor? No. It's a product cost, but it's not MOH, right? Indirect labor and indirect materials, always part of MOH. Selling expenses? No. What about utility cost on the factory?
Yep.
Yeah. Okay. So that is that 460?
Yep.
All right, good. Did anybody get all 5 of them right? Matt did.
Really close.
Huh?
Really close.
You were within several thousand of the answers, though. Is that what I'm hearing?
Yeah, basically.
Okay. It's all right. I would rather you make your silly mistakes on the quizzes as opposed to the test. And speaking of the test, this is the last lecture before we take that test, correct? And you all have a study guide for that as well. I know you folks at home do as well, okay? So you folks at home, always be looking at that red calendar on D2L, looking to see where your due dates are. Don't wait until the last day, the last hour to take the test, okay? Because something will come up, and then you have to shoot me an email, and oh, I had something at work. If you wait until the very last minute, you don't allow yourself any margin for those things in life that might happen, okay? So for every date, online students, that you take your test past the due date, it's 15 extra points off regardless of the reason, okay? So don't put yourself in that situation where you have no margin, okay? All right, let's go over, I believe I assigned some homework over the journal entries for Zulu. Is that correct? All right, so let's take a look at that. Let's take a look at that. I'll just put all the answers up here. Okay? I'll move it up here in a second. Okay? Jeremiah, do you need a hug? Do you need a hug?
Yes.
Come up here, I'll give you a hug.
I'm not
No,
giving-
come on.
no,
Come on.
that-
Come
that's-
on.
that's
Come in here for the
awful.
good stuff.
No, I can't
Come on
do
for
it.
the good
I
stuff.
can't do it.
Come
I
on.
can't do it.
Come on.
I can't do it.
It's going to be okay. Someday I'll be gone, and you'll go, you know what, I wish I would have gone up and hugged him
Bring you for child,
when I had the
child
chance.
harassment.
Okay?
That's on camera. I approve.
You were on camera, probably. Okay, let's go over the answers to these. This is the first. This is A, B, C, and D to Zulu Inc. Okay. A, B, C, and D to Zulu Inc. Okay. In journal entry A, we purchase raw materials inventory on credit, right? Okay. Then we requisition out some materials. Okay. If it's direct materials, we debit work in process inventory. If it's indirect materials, we debit factory overhead, right? Okay. Now, we don't have any account called direct materials or indirect materials, right? So make sure you don't do that. Should we be concerned that we debited raw materials inventory for 90, but the amount that we credited it for in sum is less than that? No, that just means we have a raw materials inventory, okay? All right? So any questions on those? Now, you might have combined these two into one journal entry. If you did that, that's fine, as long as the overall effect is the same. Okay, Luke?
And as far as the goods in process and the work in process, I know you said they were the same, but is it helpful to define them for different things? Like, since we're talking about like different jobs, is it more important that we say work in process, or?
Well, okay, first of all, your question about goods in process inventory, work in process inventory, they're exactly the same thing.
Right.
Some people call it goods in process and other people call it work in process.
Right.
But the second part of your question, I'm not sure I understood. Can you restate that?
I just noticed that you were using work in process more frequently
Yeah,
for Chapter
it's
19, so I just didn't know if you were just mixing it up or if it was actually helpful when it comes to job order costs or whatever.
No, there's no real rationale. The reason I guess I use work in process inventory, I have a habit of doing that more, is because in my consulting, we always call it work in process. We always talk about the WIP account. Well, let's take a look at the WIP, and that means the work in process. And because this is advanced accounting, what I'm going to tell you here, but there's a lot of funny business that can go on in the work in process inventory account. And sometimes when you're doing consulting or auditing, you need to look really closely as far as that, because sometimes they can try to hide expenses in there that shouldn't be in there to bolster their bottom line. So we just call it the WIP account. And so I have a tendency in here, but there's no real difference. There's no real difference. Okay? Cool? Good question. All right. Here's where we pay payroll. We debit factory payroll. We credit cash. Then we go through that 50,000 payroll, and we decide how much of it is direct labor. If it's direct labor, it goes to work in process inventory. If it's indirect labor, it goes to factory overhead. Okay? You with me? Now, this makes a little bit more sense that we debited factory payroll for 50 and then we credited it for 50, because you can't inventory labor, can you? All right? So, any questions on A through D? You could have made this into two journal entries if the overall effect is the same. Okay? All right? Okay, in E, we pay some overhead items, correct? And in F, we apply or allocate or assign factory overhead. And again, this is the journal entry that's most often missed on the test. This is a past test question, by the way. Okay? So we debit work in process inventory, we credit factory overhead. Think about when you debit that work in process inventory account. Whenever you do that, you are writing something on the job cost sheet. Okay? All right, let's see what's next. Oh, when the goods are no longer being manufactured and it's produced, we move it out of the work in process inventory and into finished goods inventory. Now from one inventory asset to another inventory asset. And then when we sell the job, we make these two journal entries. We would expect the sales price to be greater than the costs, would we not? Okay? And this is where those product costs that have been hanging around in inventory accounts, they finally move from finished goods inventory to cost of goods sold. They finally move from the balance sheet to the income statement. Okay? You with me? All right, any questions on Zulu? Any questions on that? What I would like to do now is, see what I got here. I'd like to work on a similar handout. I'll put it on the screen here. We're going to take some time while they play that snazzy, jazzy JCCC music, and we are going to work on Xavier Inc. journal entries, okay? So again, I think this is a past test question, but you folks at home, why don't you go ahead and do this with us while they play the music, and then we'll come back and we'll all go over it together, okay? are. Let's take a look at the answers here, okay? Let's take a look at A through A and B for Xavier. All right, it's really basically the same thing. I don't know that I need to say a whole lot more about it. It's just different numbers and additional practice, correct? So there's the answer to A and B. In regards to payroll, let's take a look at C and D. Okay, any questions on A through D? All right, let's go down. Here is some payment of some actual overhead. Here is the application or assignment of overhead when we apply it. Okay. Then when the job is complete, we may move it out of work in process inventory and into finished goods inventory. And then lastly, when we sell it, that's the entry we make right there. Okay? Okay. Let's take a look at, let's go back to the slides. I want to take another look at how and why factory overhead is applied. Okay? And we have talked about this, right? We have talked about this. Now, if you look at the slide that I had, or not the slide, but the illustration that I had last time, we had this illustration right here, didn't we? Where I showed in those journal entries we were making that indirect materials, indirect labor is getting debited to factory overhead, right? And when we pay other factory overhead items, it's getting debited to factory overhead. The actual overhead is on the debit side of the FOH account, right? And then as you saw on Xavier, when we apply overhead or allocate overhead, that is when FOH gets credited, correct? And we debit work in process inventory. You with me? Okay? Now, we'll come back to that in a minute. And I've gone through this slide many times, but once again, we know that if the direct materials and direct labors can get directly traced to the goods in process or work in process, all this factory overhead, though, needs to be applied or allocated or assigned to it. Okay? Eventually, all those product costs, though, get to this goods in process. Okay? Then eventually it becomes finished goods, and then eventually it moves to the income statement when it becomes sold. Okay? Now, they give us a couple questions just to kind of refresh our memory. If we estimate overhead at $200,000 and we estimate our activity at 25,000 direct labor hours, what is the predetermined overhead rate per direct labor hour, which seems to be our allocation base here? Well, we would simply take our estimated overhead divided by our estimated activity. That would be 200,000 divided by 200,000 divided by 25,000 hours. So our predetermined overhead rate would be $8 per hour. Correct? Okay? Then what we do, if we actually worked 24,000 direct labor hours, what amount of overhead would be assigned or applied? Well, we would take that predetermined overhead rate of $8 per direct labor hour, take it times those 24,000 direct labor hours, and this is how much we would apply or assign or allocate. Are you with me? Okay? Now, why do we use estimates of overhead? When we did that predetermined overhead rate, we had to estimate the overhead, and we estimated the direct labor costs. Why do we use estimates? Couldn't we just like wait till the end of the year, and then we would know exactly what our overhead was, and we would know exactly what our direct labor costs were for that past year? Why could we do that, and then we wouldn't have to worry about not having correct estimates?
Because it wouldn't be representative per the month.
Well, yeah, and as it says down here on the bottom, Henry, we need to be able to estimate our job costs sooner than at the end of every year, don't we? Okay? And that doesn't make sense. You can't wait till the end of the year to know your costs. Okay? Well, somebody might say, well, I've got an idea. You're right, we can't wait till the end of every year, but what if we wait till the end of every month, and we know exactly what our estimated we know exactly what our manufacturing overhead is for that month, and we know exactly what our direct labor costs were for the month. Well, the problem there is overhead is not incurred uniformly during the year, okay? Overhead is not incurred uniformly during the year. So if you try to do it on a monthly basis at the end of each month, you would have erratic costing in regards to factory overhead. Those months where there was a lot of overhead, those jobs would get stuck with a lot of costs, okay? And vice versa on the months that there was little overhead, right? You can come off that for a second. And we know that there's a lot of different types of businesses where overhead is not consumed and activity is not consistent for every month of the year, correct? Like think of a construction company. Do you think they're busier in December and January or December and January or July and August? July and August, right? Okay. I have a friend who's an auto mechanic, okay? And there's certain months that are known for being busy in the auto mechanic industry, okay? What months would you expect those to be?
Winter. Spring.
Well, holiday months like November and December, summer months because of vacation, but there's some slow months too. Anybody want to make a guess on what some of the slow months are?
March.
March and April.
Taxes.
April especially because you got taxes, okay? So people put off car repairs in April. October's pretty slow. Who takes vacations in October, right? You do, Mike? You just did, that's right. But it was a 3-day. Wait till you have kids. You won't be taking vacations in October anymore, okay, because they'll be in school, all right? So, since those sort of activities are not uniform throughout the year, and since we want to know our costs up front, we use this predetermined overhead rate, and it's calculated as we have discussed, okay? Back to the slides. Now, this lady says the predetermined overhead rate is based on estimates. What happens if the actual results differ from the estimates? Well, actually, it's not if, it's going to be when, okay? The chances of you estimating both of those items exactly is it's just not going to happen, is it? Okay? So what happens when actual results differ from the estimates? The result is either under-applied or over-applied overhead, okay? We'll have either applied too much or too little. Well, how do we deal with that? Well, let's take a look, okay? They show you this slide. I think it's going to actually be easier when I walk you through an example, okay? But what they said is if the actual overhead is more than what you apply, then overhead was under-applied and it's too low. If the actual overhead is less than what we applied, then the overhead is over-applied and the cost of goods sold is too high. Now, I think it's easier to walk through an example, so let's do that, okay? Let's switch over to the document cam. All right, now there is the T account for factory overhead, right? And we talked about how the actual overhead is on the debit side and the amount we apply or assign is on the right side, correct? Okay, so let's say that we our actual overhead was 100,000. Okay, I'll make the numbers easy. And let's say the amount that we applied is 97,500. Okay? Well, is this over applied or under applied?
Under.
It's under applied, right? Okay? So what is, if I figure this out at this point, what's our balance here?
500.
2,500 on the debit side. Okay? Well, remember when I told you that factory overhead is not on any financial statement? It's not. So every now and then what we have to do is we have to true this up. We have to zero this out. Okay? So what do you have to do to this account to zero it out?
Credit for 2,500.
You have to credit it for 2,500. Then it has a zero balance. So we have to credit, that's a zero. we have to credit factory overhead for $2,500. And what do you think we debit?
Goods sold.
We debit cost of goods sold. So this is the journal entry that you would make. That'd be like an adjusting journal entry at the end of the period to kind of true up factory overhead. Does that make sense? Okay. Well, let's look at it if factory overhead was overapplied. Okay. Well, let's say that we add up everything on the debit side and we have 102,000 and the amount that we assigned is 103,000. Okay? Well, is this overapplied or underapplied? This is overapplied, right? What's the balance of this account as it sits right now? $1,000 on the credit side, correct? If I want to zero that out, what do I have to do? I have to debit it, right? And now it has a zero balance, okay? So I had to debit factory overhead for 1,000, and what do you think we credit?
Goods sold.
Cost of goods sold. Now some people think this is odd that we credit cost of goods sold because this really wasn't goods sold. But I think the reason we put it in cost of goods sold is we kind of treat it as a cost of doing business, and those were product costs, right? Okay? So, questions on that? We have another slide here we can take a look at. Fishco had actual manufacturing overhead costs of $180,000. They applied $192,000 based on that predetermined overhead rate. What's their manufacturing overhead? It is what?
A.
It's $12,000 over applied because the amount that we applied is greater than the actual. Okay? Cool? Okay, now I have some Connect. I have a Connect assignment over Chapter 19. Okay, so go do that Chapter 19 Connect assignment. Okay, you don't have a 5-day window to do it this time. Okay, so go do that Chapter 19 Connect assignment. And I know one of the things I ask you about is the over and under applied overhead. Okay, so do that before you take the test. All right. Folks at home, always be looking at the due dates on the red calendar on D2L for Connect and for tests. And then there's one other thing I want to tell you about, but I'll ask first of all if there's any questions. Now remember, this test, I say it's over chapters 18 through 20, but it's barely over 20, right? It's really over 18 and 19. Okay, and we talked about that when we walked through the study guide last period, correct? Okay. Well, number one, good luck on the test, okay? Secondly, though, there is something I want you to do after you take this next test, but before you come to the next lecture. Are you with me? Okay. Have to make sure I can get everything in. And the lecture that we will have that will be number 229, again, after this third test, it will flow a lot smoother if you have done this, okay? So what I want you to do after you take the test, but before lecture 229, is I want you to read chapter 20, and then I have a chapter 20 Connect assignment, okay? It's not real difficult. Okay, you'll see that there's a lot of overlap between chapter 20 and chapter 19. But after you take the test 3, but before lecture 229, you folks, you have an assignment. Usually you don't have that after test. You can just take it easy for a couple days. And not this time, I'm sorry. Okay, I want you to do that Connect assignment that is worth points. Okay, and so make sure that you do that. All right? Okay, any questions? All right, guys, good luck on test number 3, and we will see you on lecture 229. Make sure you bring your calculators to the lecture. You should always have your calculator, but especially make sure you bring them on lecture 229 and do that chapter 20 Connect assignment before then, okay? Hey, I'm letting you out early. See ya.
Go Royals.
Go Royals.